Is it a bull market or bear market? Where do we go from here? Everybody wants to know. What's the answer? Nobody knows. Those who tell you they know are either stupid or lying. And what I've always said is you should be investing with the idea that if it goes up a lot, you're set and you're prepared for that. And if it goes down a lot, you're set and prepared for that, because you can't predict. So what I want to talk about in this video is a couple things of what I think, what could be going on. Why has the market dropped like it has? And what else do we want to talk about? And then, and how we should be prepared. What's the best way to be prepared right now going forward? So first of all, why, as far as the market falling a lot, at the beginning when it started going down, I was like, well, it went up so much. This is just normal, like whatever. And for a while I was posting, I'm like, it's not even down yet, right? I mean, it was like Ethereum went from 2,000 to 4,000 in a matter of days. And then it was down to like 3,500. And I'm like, it's not really down right now. We're still up a lot. Okay, now we're down, right? So what happened? Part of it is things go down when they go up a lot, but now there's more than that going on. And I have a few hypotheses on what some of the things that can be causing these problems. And the biggest one is central bank printing / liquidity. I'll get to that one third. There's two other things. One is the mood in China on crypto right now is super negative. Like, I follow this woman, Dovey Wan, who's a longtime crypto investor, lives in China. And there was a tweet, I retweeted it on my page. My Twitter is at Dave Levine, 0.com. And anyways, this one, it showed a guy on TV literally saying like, oh, if Bitcoin becomes the reserve currency, you know what will happen? We're all gonna die. And he was serious. Like, for those of you who aren't sure, like, having a hard money that cannot be manipulated as the base layer of the financial system throughout history has shown great things happen in society. A debased and manipulated currency usually coincides with bad things happening in society, and specifically wars. So I don't think we're all going to die if we have a reliable reserve currency. I don't think it's going to be Bitcoin. I think it's going to be Ethereum. But anyways, we're all going to die. It's, and Dovey Wan was saying, this is the mood in China right now. Like, everybody's super negative. Which is funny because in America, still, it's very positive here. People love crypto right now, and a lot of places in the world. But China's big, and they suddenly became super negative. So maybe we're still just seeing a lot of selling coming out of China. I don't know, maybe. Another thought is, on one hand, you'd think it's very positive, right? I saw Carl Icahn talking about crypto and how he's interested, and the person interviewing him was pretty good. She kept pressing him on things like, really, what do you like? And then he's like, well, we like Ethereum, and and we could invest in Ethereum. She's like, well, how much are you going to invest? And he's like, well, we wouldn't buy a little amount. She's like, how much? And he's like, well, we would buy $1 billion or $1.5 billion worth of Ethereum. I was like, whoa. Remember, Elon bought $1.5 billion of Bitcoin, and that really moved the market. And Bitcoin's a lot bigger. Like, Carl Icahn buying $1 billion worth of Ethereum, that's going to move the price. So that's cool. And maybe he already bought it, and he's pretending that he hasn't, and he wants to pump the price. I don't know. But another thing, and I saw a tweet about this, and I couldn't find it because I wanted to read it to you. I couldn't find it again, and I've heard this before, just in general, when big players want to get in the market. This guy was talking about how he helps bring institutions into the market. And the way that they do it is, for one thing, they create these negative crypto articles, and they give it to New York Times, the Wall Street Journal, and they tell them, hold the article, we'll tell you when to put it in. Right? And then they go to smaller exchanges with lower liquidity. And let's say they want to buy Ethereum. They put a big chunk of Ethereum into that exchange. And then they tell the magazines, put out the negative news. Then they go onto these small exchanges and dump their little bit of Ethereum, which moves the market lower, and they ignite a drop, and then they buy for their client. And it's funny because a lot of like newbies out there and kids and traders, you love to buy when it's going up and when it's expensive. Smart investors like to get in when it's falling, right? So, maybe Carl Icahn's getting in and this is him manipulating the market lower so he can get in at a better price. A little conspiracy theory-ish there, and I don't really think, I'm not saying that's going on. But it's something to be aware of, that sometimes these drops are just short-term manipulations and you ignore them. Now, the main thing that moves the price of all financial markets, it's always been true sort of in the long run, but these days, very specifically, is central bank printing money. So on one hand, you say, well, it's easy. If the central bank's printing, it's going up. If the central bank isn't, it's going down. But the issue, it's tricky because you never know how much they need to print, right? So the central bank is printing money right now. They're printing this much money, right? But what if it needs to be this much? And so now there's a problem because there's not enough liquidity and they need to print a lot more. So then it's going down. So what happens, like in 2018, the central bank started reducing the size of their balance sheet. If you look at the chart of the central bank balance sheet, 2018, it just starts going down. As soon as it started going down, crypto crash began. 6 to 8 months later, stocks started to fall apart. And so you have this thing they call the risk curve. Now, I don't agree with these definitions of risk. The U.S. Treasury is the riskless asset. I don't think it's riskless at all, but according to the legacy system, the way it works, the fiat world, U.S. Treasury is the most riskless, and then you probably have mortgage-backed securities, and it goes along the line, and then it's stocks. And within stocks, you have value stocks are less risky than growth stocks. And the thing on the furthest end of that risk curve is crypto. So in a sense, crypto can be a canary in the coal mine. Maybe crypto is going down because there are some liquidity problems somewhere. And the first things that people reduce when they want to start reducing risk, the first thing to go is crypto. And so on one hand, crypto's a canary in the coal mine. Well, that's great. But if you're in crypto, it's not great because you don't get any warning, right? So maybe there's an underlying liquidity issue right now. Crypto is telling us there's a problem, and I don't know whether it's weeks or months from now we start to see something blowing up in the legacy financial world, and the central bank has to come in and print $2 trillion to bail that out, and then we all start going straight up again. That could be happening. And again, it's like, well, so that's good because as soon as they print, it's all going to go straight up again. Yeah, but I don't know. What if the central bank doesn't print money because they want to or they plan to. They don't know what's going on and they don't know what the hell they're doing. They're reacting and they're putting out fires. They're not going to print. They're on this pace. They're not going to make the pace go faster until there's a fire, until they're forced to. And so, if things are going down because of a liquidity issue, that's going to keep happening until something in the real fiat world blows up and then the central bank prints a ton of money. So that would be a reason for this market to keep going lower for a while. Did I say I had to remake my video? Now I can't remember what I already said and what I didn't. If I'm repeating myself here, I apologize. You want to be always prepared for if the market goes straight up, you're prepared. If it goes straight down, you are prepared. If it's flat, no matter what. And so, for me, when the market started crashing and if the bull market's over, okay, well, I already bought my house, all cash, thank you. I've got enough cash set aside, I can wait. And I've been talking a lot about because I've been thinking, the way these patterns usually go is you would expect Ethereum to go to 10,000 and Bitcoin to 100,000 and maybe have some crazy spike higher for a minute. That's what seems, would be the crypto pattern, and that's what I was expecting. And I'm still not giving up on that as happening, it's possible. But, within that scenario, the amount of Ethereum I have gets really, really silly. And then I got to sell some off, right? Have some cash and diversify. But what if we're sitting here at 2,000? That changes my equation. I'm not, I've been advising as we go up and up, dollar cost average selling, and maybe you continue that here also. But I don't feel as needing to unload Ethereum. Like, to me, if we're sitting in the 2,000s here for 6 months or a year or even goes lower, now I'm looking at Ethereum not as this thing that's going straight up that I have too much of. Now it's like this thing that, I don't know, today, is it fairly valued or is it expensive according to most people? I don't know. But for my 3 to 5 year thing, this thing feels cheap. And same with my Uniswap. I don't mind holding this. Now, Uniswap I have a lot less than Ethereum, but I don't mind holding it. So that changes my equation. I'm like, okay, well, I'm a long-term holder and I'm still holding. The only reason I sell, it's the same thing with my Tesla. When I invested in Tesla, I'm like, I'm going to hold this for 10 years. It's going to keep growing nicely for 10 years. So if Tesla's growing like this, great. But when the stock goes like this, I do take some off the table because it's just gone up too much. So same thing with Ethereum. If Ethereum's growing like this, but the price goes like this, I'll sell some. But now, if the price now is here, okay, I don't know. Do I really need to sell some? I mean, I don't need the cash. So now it changes my equation, right? Ethereum under 3,000, I'm a long-term holder. Maybe I just stop the dollar cost average selling under 3,000. And, so I'm playing this by ear, right? Where you can't just have a plan and just everything is depending on what happens. So now the other thing is too, just as far as the chart, when you follow the chart, I'm not a big chart guy here by any means, but if you're following the normal patterns, to say that the bull is on and this was just a correction, Ethereum needs to go through 4,000, needs to get to 4,500. Then we're probably going to see that blow off top. If, on the other hand, we stay here in the low 2,000s, if it keeps sort of doing this, a common pattern when you're in a bear is it went to 1,900 and then bounced. And then it goes to 1,900 and bounce, and each bounce a little lower, like a ball that bounces, right? Boom, 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 boom. And then you get that final boom, and then you take off again. So if we bounce off 2,000 another time or two, it ain't looking good, right? For this bull market continuing. And so, what am I getting at? The point is, right now, we're sort of in the middle here. If it's from 22,500 to 3,200 regarding the chart, it's in the middle. This could just be a pause in a bull market that's going to continue, or we could just be on our dead cat bounce at the beginning of the bear. As far as the chart is concerned, it's not giving any information. And don't follow charts anyways in the short run. Charts can help in the long run but right now it's no man's land. And so, my point was, when we were in that crash and it fell to 2,000, where were you panicking? Where were you like, oh shit, I wish I sold this, or shit, I wish I did this or that? Whatever those things were, take note and do that now. If you were like, oh God, I wish I sold a little more Ethereum because I need that cash, well, we'll get some bounces here. I wouldn't, Ethereum could easily, even if the bear market has begun, Ethereum still could go over 3,000, go all the way up to 3,500 before it swooshes lower. So you would get a chance to get out at decent prices if that's what you need. So think about it and remember how you felt when it hit 2,000. What were you panicking and wishing you did? Because now you're going to do it. It would have been great if you did it at 4,200, but you might not get that chance. So you're going to want to do it at, I would say, 3,000. I had one thing is I've got this, I'm playing with this reflexor borrow RAI against it, and so I've got my collateral. I've got plenty there, but when it hit 2,000, it's like, well, I got another. If there's another 50% draw, I could be getting near where I would get liquidated. So I need to add more Ethereum. So I have enough cushion. I don't need to do it when it's crashing and gas prices are super high. Now prices are low. So now I'll go and add that, because if there's going to be more swooshes down, I don't want anything. The more valuable than money, more valuable than profits is the ability to sleep and have no stress. For me, I don't like to get near that. Someone posted on Twitter, they were like, well, I was like, I love ETH. He's like, well, how much leverage do you have on ETH? I'm like, how much leverage? I just thought it was funny that he'd even ask me. Like, I don't understand why anybody does this stupid leverage game. You're in a super high volatility, fast moving thing. What, you need leverage on that? Only thing leverage does, it makes you move a little faster. You need to move faster than we're already moving. But why introduce risk of total loss, right? Even if you only have, what's the smallest leverage is like 2x. I guess that means if it falls by 50%, you get liquidated. What? It can fall by 50%. In a night, you wake up and you're done. Why would you want that? I don't understand why anybody has leverage if they're trading it. I understand leverage if you want to buy a house and you can't yet afford it, but you have a job and so you borrow to have a house. I get that. Long-term investment, long-term business investments, I understand some leverage. But if you're investing in crypto, I just think it's insane. Never mind 100x leverage. Obviously that's retarded for any. I'm not supposed to say retarded anymore. That's stupid. 50x, any leverage. Why? I don't get it. If you have leverage, you want to tell me why you have it, it makes sense, put it in the comments. I'd love to hear. I can't imagine. And so, yeah, back to my goals. So, the thing to look at, your total portfolio, how much cash do you have in your portfolio? And by cash, you've got fiat cash and you got crypto cash, right? Crypto dollars that can be earning yield. If you're into that, that's sort of an advanced game. But if you're playing that game, how much is in fiat world? How much is sitting in Bank of America earning 0%? And how much is in like DAI or USDC or whatever stable coin earning interest, maybe in Compound or Aave? And what percent do you want that to be? If we're going into a bear market, it's great to have a lot of cash because now you'll have ammo to buy stuff cheap. A little bit of that is if you own ETH, it's better than owning little DeFis going into a bear, because you could trade from your ETH into small DeFis when things are cheap, because the DeFi apps, the smaller apps, should go down more than ETH. So that's another way to look at it if you're more concentrated in Ethereum than small tokens in a bear. And so, look at your percent and how much cash you have and how much you want to have. Now, if Ethereum goes up to 10,000, that makes it a lot more risky for a big fall. And also, my portfolio is a lot bigger, which makes my cash percentage smaller than it was because the ETH went up so much. And so if you wanted to have 10% cash, 10% dollars, and ETH went to 10,000, you got to sell a bunch of ETH to get that dollars to 10%. Now at these lower numbers, it might not be as much, and you might not want as much cash because you're not as convinced that it's too high, But anyways, it's important to put all your numbers down. If you just got a bunch of stuff sitting in your wallets or in the exchange, put it in a spreadsheet and see what percent of your portfolio is ETH, what percent is DeFi, what percent is whatever else, what percent is cash, and make sure those percents line up with the amount of risk you want to take, right? If you have 10% of cash, that means that you're not convinced that everything's going to go down. It's only 10%, but it's something. And if you're whatever, you look at it that way. If you think I want to be more conservative, and like 80% of your money is in SushiSwap. SushiSwap might be great, but 80% of your money in a small DeFi app that just launched 6 months ago, that's a lot of risk you're putting into that one app. So take a look at your numbers. Feel free to tell me, your numbers. Put it in in the comment. Say, this is my portfolio distribution. What do you think? I'll let you know. I think that's all for today. Hope you enjoyed. Let me know your thoughts. Thank you.